All right, we'll give everyone just a moment to finish logging on here, and I'll start the introductions and say who I am, and we'll see where we can go from there. Okay, so I'm gonna go ahead and get started. Good morning, everyone out there in virtual world. My name's Andre Hargrave. I'm the director of the Minority Business Development Agency here in the Rocky Mountain region, which is housed in the Denver Minority Business Center. The name's a little confusing, even though it says we're a minority. We work with everyone, especially small and socially disadvantaged businesses. And so today what we're going to do is we're going to have a financing panel of some esteemed individuals here. Some I have known ever since I was a little boy, but not quite. I've known for quite a few years. I trust them. Even with my own firm, I've had some financing with one of the organizations on here. And so I trust these folks 100% with our portfolio of small businesses. And with that said, what I like to do is just I'm gonna make some introductions, but first I have to pay the bills. So I have to explain the Minority Business Development Agency and what we do. We're located here in South Denver in the Tech Center, and we have a 4-state region. Technically, we're national, but we follow the territories of our host organization, which is the Rocky Mountain Minority Supplier Development Council. And so what we do is we help companies grow and expand. That's our job. This particular office, we do it through contracting and through finance. So we'll help you find a deal, source that deal, target it, win it, hopefully, and then come to one of these individuals that will also help finance those deals if possible. So today we're going to hear from Marie Peters, who is the director at B-Side. We're also going to hear from Alan Ramirez, who is the Director of Strategic Lending for the Colorado Enterprise Fund. And Megan's going to be mad at me, but Megan Ruckers from the Community Engagement Office, which is with DreamSpring. And then finally, Ryan Flanders with Rocky Mountain Microfinance Institute. Now, one of the great things about this, what a lot of people don't realize, is that everyone on the screen, even though there is some overlap, they all have their individual specialties that you can also talk to them about. Because I always know that financing is one of those touchy things, right? We all need it. And even my firm, we need it when we win deals. But we don't really sometimes like to put our financial information out there because we've been taught to keep that close to the chest. But I can assure you that if you want to talk to any of these individuals offline, they'll be honest, they'll be candid with you, they'll tell you what you need to grow to actually grow your enterprise. And that's what we're going to do. And with that said, I'm going to turn it over to Marie Peters right now. And I think I've known Marie 17, 18 years, something like that.
That
Yeah.
sounds right.
Yeah, back when I had hair, right? With that said, Marie, it's all yours.
Thank you so much, Andre, and thank you everybody for participating today and then also including me. I'd be happy to share a little bit more about B-Side Fund. We are a 501c3 nonprofit organization, and we are set up to foster the economic growth of diverse small businesses. And we do that by providing, we have a number of programs, but our direct lending program, which what I'll focus on today, is where we're able to provide loans for small businesses who are underserved, under-resourced, underestimated in some way, where maybe they are not ready to get a loan from a bank. So very similar to the other organizations on the call here and our partners. So we can finance anywhere between 20,000 and 350,000 with terms anywhere between 3 and 10 years. And we have both fixed interest rate and variable interest rate products, and anywhere between like 6% all the way up to prime plus 4.5. Something I'd like to highlight is that we don't have any prepayment penalties. We again are designed for businesses who can't, for whatever reason, get bank financing. But the whole idea is maybe you work with our organization or DreamSpring or RMFI or CEF. And then the idea is then you can then quote unquote graduate into the banking system and be able to access those bank loans and lines of credit, et cetera. And so we encourage that, when people repay, that just gives us funds to then recycle and then relend out to other small businesses who need it. We can finance anything between working capital, equipment inventory. We can also help refinance debt. We definitely see some businesses that maybe they started their business with a business credit card, or they got some money from an online lender that ends up being really expensive. We can help you kind of refinance that, spread that over a longer term to help with those cash flow needs. And then also business acquisition. A lot of times business owners are starting their business from scratch and launching their own. But another way to access entrepreneurship is through acquisition. And so we try to help with those transactions as well. Some of the requirements that I think are typical in the industry, we do want to see a personal guarantee for any 20% plus owners. We do need to take a lien on business assets. Some of our smaller programs, we can waive that. We do want to see that the business owner is able to kick in a portion of that loan. But again, for working capital and debt refi, we can waive that. And then sometimes we need to have proof of insurance. And so again, just like Andre said, financing, it's a lot. There's a lot involved in there. So I just encourage people to reach out to any of us to kind of have that conversation, because depending on your specific situation, we'll be able to navigate and tell you which programs that you might fit in and what those specific requirements for your business are going to be. Our application process, we have a quick eligibility check that's on our website. And if we feel like we're an initial good fit for your business, it'll lead you to our online application. And that's where we begin reviewing. We'll reach out, we set up a call, kind of talk through your capital needs, and move forward from there. And hopefully, we're able to approve, close, and fund that loan. Again, we are a small nonprofit. So yes, we have lots of different programs, but if we're not a good fit for whatever reason, we know all of the resources that are here in our community. And so we're always happy to help you point your business in the right direction and connect you with the resources that will be important for your business if we're not able to help directly. So we can always make those warm introductions to other lenders, consulting groups, resources just like this one. So happy to help you navigate all of those resources. And you can learn more about our resources on our website. And I think we'll be sharing the slides after. But if you have any questions, feel free to contact us. My email address will be in the slides, and always happy to set up a call and talk through your needs. So with that, I will pass it off to the next speaker.
Thank you, Marie. And I put this in the chat, but if you have any questions, please feel free to enter those into the Q&A box, and then we will address those for our panelists at the end. There will also be an opportunity where you can unmute yourself if you'd like to ask some questions. Let's now turn it over to Alan Ramirez. Alan is the Director of Strategic Lending for Colorado Enterprise Fund. Oh, Alan, you're still muted.
There we go. Thanks so much, Sarah. Thank you guys for having us. Let me pull up my PowerPoint really quick. There we go. All right, so I'm Alan Ramirez. I work as our Director of Lending, and I'll be sharing a little bit about Colorado Enterprise Fund. We also refer to ourselves as CEF for short, but I'll be sharing a little bit about what we do as a CDFI. I'll share what we do in terms of our products and services, how we operate, why you might come to CEF, and then I'll talk a little bit about our business navigation services to end. So a CDFI, it's essentially what Marie mentioned. We're mission-based lenders, and essentially we're lenders with a focus on community development. So that might mean, as lenders, we're very focused on, is the business in a rural community versus a metropolitan area? Is it an area that's just underserved in terms of maybe there's not banks or access to capital there? Is it woman-owned, minority-owned, veteran-owned? So those are different characteristics that we look at. We're still looking at core pieces of the loan, but CDFIs are focusing on that community development piece as well. CDFIs can come in very many shapes and sizes. So you might see us as a bank or a credit union or a loan fund, which many of us are here in Colorado, also venture funds as well. We're certified by the U.S. Department of Treasury as a CDFI. And lastly, there's about 1,000 throughout the country. And then here in Colorado, we have about 15, which is fantastic in terms of just resources and access to capital. So we were founded in 1976 as a loan fund. And so since that time, we've always been helping businesses that are not bankable. And so we too are a nonprofit, we're mission driven. And essentially for businesses that need a loan for their business, maybe they're starting their company, maybe they're trying to grow their company, but for whatever reason, they walked into their bank and they're just not quite bankable. And there's a lot of different reasons why a business may not be bankable. It could be the size of a loan. It could be it's a small loan and it may not make sense for the bank to offer such a small loan. So it doesn't mean anything negative. It just might be something as simple as that. It could be time in business as well. And lastly, it could just be the basics of a loan, right? Maybe credit is lower, maybe collateral is not there, maybe the cash flow is a challenge. And so that is specifically the segment of the market of the different types of business owners that we're working with. We're really attempting to be a starting point for many of these businesses. Marie mentioned, growing that small business owner so that they can access that Main Street financing, right? So now that customer potentially has better credit. Maybe they have 3 years in business and now they can go to their bank and qualify for those larger loans. And so we kind of fill that gap as the business is becoming bankable. 60% of our customers are underserved, which I mentioned already. It could be low income, it could be minority or women-owned, veteran-owned, but 60% of our portfolio is underserved. And we partner, the way we put these loans out into the community is we have to partner with organizations like the MBDA, like the SBDCs. We're a smaller nonprofit ourselves. We have about 40 staff, but we can't do these loans without partnering with the community and really trying to get this capital out there to our clients. So we offer a lot of different products. Generally, our core loan is our small business loans. That's our main product offering that we provide. We also do a lot of community impact loans. So this is more behind the scenes, but we administer about 13 different loan funds for different cities and counties throughout the state. During COVID and after, we got into grant administration. So deploying a lot of grant capital out there throughout the state. New market tax credits is something that we offer. These are much larger projects, not really something I'll go into today. And then our last product offering is separate of the business loans that we offer. A lot of our clients just need more support. And so we offer business consulting to our clients and we tag that as business navigation services. And then lastly, on our small business loans, our smallest loan is $10,000. Our largest loan is up to $1 million. All that business coaching is one-on-one, in person or remote, whatever works best for that customer. And ultimately, as a CDFI, I think one of our strong suits with all of us probably on the call today is just the flexibility in our underwriting, the flexibility in some of our terms to give some of these business owners breathing room with those terms so that they can afford the payment, so that they can ramp up and kind of get accustomed to those payments. So I think those are some of the advantages of working with the CDFI as well. And so why might a small business owner come to us? I've mentioned some of these already, but they may have lower FICO scores. And for CEF, the smaller the loan, the more flexibility we have. A lot of our customers don't have strong credit. In fact, many business owners get stuck with credit, right? Maybe they had a bankruptcy a few years ago. Maybe they lost a job, got in a divorce. Those types of life events can impact all of our FICO scores. But our goal is to really provide economic mobility and really trying to help these businesses get unstuck. So if someone went through a bankruptcy or someone went through a divorce a few years ago, but they haven't really developed new credit since, we really do our best to provide that starter loan to see if we can help with that loan, report on their FICO, begin to build some FICO, and maybe we do a second loan in the next 6 months to a year. And again, we're really looking at that economic mobility. We don't want to allow credit to hinder that customer's ability to grow. If someone's late on FICO in the last 6 months, that's a bigger issue, right? That challenge it means more. But if someone had something years ago and they've just never gone back to clean it, that's where we have a lot of flexibility. So that's something to consider. We do unsecured loans, meaning we don't take collateral on loans 50,000 and under. So lots of flexibility there. Tighter cash flows. We, as I've mentioned, almost 50 years doing these types of loans. Many of our customers have tight cash flow, meaning they needed the money yesterday or last week. They have payroll coming up. And so we are accustomed to seeing limited cash flow. But again, how can we extend our term to still give that cash injection to the business and hopefully give them some ease in absorbing that loan so that they can grow the company, absorb that payment, still make payroll, those types of flexibilities. The longer terms I've mentioned, and almost 50% of our loans are startups. So we do a lot of projection-based requests as well. The use of funds, I won't say a lot about that, but as long as it's for the business, it's going to be eligible. So a lot of working capital, equipment, business purchases, commercial real estate, or just some kind of tenant improvements, all of that would be eligible. We do some larger projects, some larger deals. I'll start with the microloan program. I mentioned 50,000 and under, lots of flexibility there. We've got a SBA 7A Community Advantage program that allows us to do loans up to 350,000. And then our loans up to $1 million, most of the time that's going to be to do real estate or some type of gap financing. We're seeing a lot of business acquisitions as well in the market right now. The community loan pools, as I mentioned, we have about 13 of those throughout the state. Essentially, a city or county may come to us and say, hey, CEF, we're trying to deploy funds to this targeted community. And so right now we've got funds in Adams County, Boulder, Lakewood, Arvada, communities like that, where we're taking extra risk in those areas to provide that access to capital in those communities. And then a few loan programs that we focus on, initiatives. We've got a Valor program for our veterans. Transforming a Safety is a program based in Colorado Springs to help very low-income communities, folks coming out of the prison system as well. But that's been a strong program for us. Access to healthy foods. Rural communities, even urban communities that may not have access to a local grocery store or fresh foods, butcher shops. We're providing access to capital to those types of business models. We have a Black Business Loan Fund, dedicated funds to that community. Creative industries is really anyone making a product, whether you're a brewer, a distiller, an artist, an author, anything that is in that creative vein. We're also very focused on helping that niche. And then ITIN loans are for our customers that do not have a social security number, but that are operating under a tax ID number. We also have loan programs to support that community as well. We help many startups and existing businesses. This is a quick list of some of the documents that we would be asking for either a startup or existing. And so a lot of this information is on our website as well, but just as folks are looking to potentially apply, you can either call us or go to our website to get more of these details, but this is a quick snapshot of what would be asked for. And lastly, just a little bit on our impact over the years. As a CDFI, you have to devote at least 60% of resources to underserved communities. But in our time as a CDFI, we've supported over 8,400 small businesses. We've deployed over $315 million in capital, supported at least 32,000 in jobs either being created or being retained. The consulting services, significant there with over 50,000 hours. And then as far as who we help, our low to moderate income at 58%, minority owned at 37%, startups at almost 50%, our veteran owned community at 11%, and of course, women owned at 47%. And what I wanted to share on the consulting service just quickly is we offer the loans, but our consulting services are free throughout the life of the loan for that customer. So we really focus on 4 different areas. It's our financial literacy piece, it's the marketing, it's operations, and then legal assistance. But the idea is to be a soundboard for these business owners. We have a lot of mom and pop type businesses. And what if someone is trying to consider buying out a competitor? What if someone needs some help? If they're working with the city of Denver and they're reviewing an agreement, we have lawyers that can review that for them. If someone wants to increase their visibility, their social media, their website, we have folks that can help with that. We have QuickBooks specialists and accountants that also can work with customers on that financial side. So really, as a CDFI, we just want to help customers not only with the access to capital, but hopefully running their business more efficiently at a better margin so that they're ultimately, hopefully able to have stronger cash flows for themselves and for the growth of their companies. So if anyone has questions, feel free to contact me directly or go to our website. And as Sarah said in the beginning, or Andre, I think the PowerPoints will be shared. So happy to answer any questions down the road. Thanks so much.
Thank you, Alan. Yes, we will be sending these out. And then, as I said, we'll be doing questions here after Megan and Ryan get their chance to do their overview. So next, I'd like to introduce you to Megan Raucher. She is the Community Engagement Officer with DreamSpring. Thank you, Megan.
Awesome. Thanks, Sarah. Good morning, y'all. Let me pull up my slides. All right. So as Sarah mentioned, hi, everyone. My name is Megan Raucher. I'm a Community Engagement Officer for DreamSpring. Really excited to be here today with all these other incredible organizations that are all here to serve small business owners and entrepreneurs like yourself. I promise between all of us, I'm sure that there's going to be a great fit for you, depending on your industry, what you're looking for, and what kind of relationship you want to have with your lender. To give you a super quick background on DreamSpring, we are also a CDFI. You may have heard of us a long time ago. We were founded in 1994, originally in Albuquerque as Accion, New Mexico. We expanded into Colorado in 2008, but then in 2019, we rebranded to DreamSpring. So we have a long history of lending in Colorado, as well as across the country, but we used to be known as Accion. We do small business loans from $1,000 up to $2 million, and I'll go specifically over what some of our products are and some of the qualifications and things you should consider in looking at documentation requirements. While we have that huge span, our sweet spot really is startups and on the smaller side. So our average loan size is around $13,500. And to give you an idea of the turnaround on some of our products, for our DreamSpring, we are also an SBA lender. On our DreamSpring products turnaround, if you get us all of your documentations in order, we're talking about 4 to 5 business days. On the SBA side, because we're working with the government, can be anywhere from 4 to 6 weeks. But I'll go over those products in a little bit more detail. Since 1994, we've issued over 50,000 loans, totaling over $538 million to small business owners for an estimated 65,000 plus jobs. To give you an idea of our service area, we do serve 27 states, but like I said, Colorado is one of our legacy states. We've been here since 2008 and have loans and supported entrepreneurs in almost every single county. I think there's only 4 counties in the state we don't have a client in. We are an SBA Community Advantage lender. It's only available in certain markets, Colorado being one of those. All right, so to give you an idea of needed documentation, Alan did a really great overview. We're very, very similar in what we're looking for. We'll need verification of your business, especially for those that are not registered as a sole proprietorship. So any of your articles of incorporation. Also, if you have any certifications, if you're a minority-owned business or a HUB certified business, that information is also great to have for us as well. We'll also be looking at verification of personal income for yourself, your co-borrower, or any guarantors you might have on the loan with you. We'll also be looking at verification of business income, specifically for those businesses that are already in business. And a startup in the industry is defined as anything 2 years and under. So if you're over 2 years, existing business, under 2 years, startup. We do ask for collateral on loan products that are over $5,000. we can be really flexible with that. And that's a conversation you can have with one of our loan officers. We really want to meet people where they are and make sure we're setting up the loan in a way that makes the most sense for you and your business. We do ask for a formal business plan for businesses less than 6 months in operation, or a lean model canvas, just an idea of what you're planning to do with the funds and what your business plan is overall. All right, so our first product is our small business loan. So loan range is $1,000 to $250,000, terms from anywhere from 24 to 72 months. We do have a minimum credit score of 600 and our interest rates start at 9.99%. And like I mentioned, that collateral is required for loans that are more than $5,000. And you guys will get all these slides. And if you have more specific information or more specific questions, you can contact me as well. For the Community Advantage loan, as I mentioned, we do $50,000 to $350,000. Those terms on those loans are going to be $5,000 to $10,000. The credit score minimum on that will be 650. Interest rates are prime plus 4.5% or 6%. And there are some collateral requirements as well. And as I mentioned, this is available in Colorado. So if you're a business owner that's looking for if you're looking to buy bigger equipment or you need a longer term investment, SBA products are always a really great option for you because they are partially guaranteed by the government. And we have some really fabulous SBA lenders on the call today. So make sure you look into that if you're definitely looking at products or looking for a loan that's over $50,000. And we also do commercial real estate. So for business owners here that are looking for investment in property, specifically if you have storefronts or need warehouses and things of that nature, we are able to do that. Our loan ranges for that specifically are $50,000 up to $2 million with 5-year term loans. The minimum credit score on that is also 650, and the interest rates on that are going to vary depending on collateral requirements. Also something you can discuss with your loan officer. It does need to be 51% owner occupied. We've been doing a lot more of these recently. So if you have more specific questions, we can talk offline about that as well. All right, really quick disclaimer on industries we don't serve, because as a CDFI, we do get federal money. So there are some qualifications and restrictions on how we lend out that money. So we are not able to lend to businesses that are involved in alcohol, tobacco, with the huge exception of wineries, distilleries, and breweries. So if you are in that industry, you're eligible for a DreamSpring loan. Also businesses selling products containing CBD oil, anything with firearms, weapons, ammunition, anything in the adult entertainment industries, or speculative businesses or predatory lending services. I'm keeping this super brief because I want to make sure we have time for questions. The fancy QR code in the corner, please feel free to scan it. I'm more than happy to connect with you. We also have a lot of digital resources. We have an online business blog and a monthly newsletter that goes out with resources that includes opportunities, events for networking, education, grants, everything you name it. As a community engagement officer, it's also really important to me to make sure that we're putting out information that people want. So if you're thinking, Megan, I wish we had more information about why a line of credit or a loan would be a better option for my business, please let me know. We're here to be a resource and a connector. So similar to what some of the other panelists are saying, if we're not the best fit, I definitely have someone in the network that will be. So we're happy to connect. We just want to make sure that we're supporting everyone in our ecosystem for our small businesses to thrive. Thanks, y'all. I'll pass it back to you, Sarah.
Thank you, Megan. All right, we're going to go ahead and bring our last speaker up. That is Ryan Flanders. Ryan is the Director of Lending and Capital Systems for Rocky Mountain Microfinance Institute, or RMMFI. Thanks, Ryan, for being on.
Yes, of course. Let's see. Here we go. All right. So like Sarah mentioned, I'm Ryan Flanders. I'm the Director of Lending for Rocky Mountain Microfinance Institute, or RMMFI. So happy to be here with other colleagues and peers in the CDFI industry. We're all know each other well and like to refer to each other and connect with each other and collaborate. So you're in a good room with a lot of good people. So first of all, who is RMMFI? We'd like to start with our North Star. So our North Star is, like our mission statement, and it's really what guides what we're all about. So we are a community development financial institution, CDFI, and Alan. Shout out to Alan for a really good breakdown of what that means. And as a CDFI, we create space for communities of people of all backgrounds to realize their unique potential through the power of entrepreneurship. And how do we do that? We do that by investing in entrepreneurs' personal and business development through a mix of classroom, coaching, capital, and community. And so who is our community? And our community, we're, as a CDFI, our mission is to support resilient Coloradans who are ready for business ownership, who maybe face marginalization, societal barriers, or low-wage employment. And so we work with entrepreneurs from a variety of high barrier backgrounds across many locations, ages, and demographics. And that results in a diverse, welcoming community of entrepreneurs. Our mission and our specific target market as a CDFI is to serve low-income entrepreneurs. Almost 80% of our businesses served are women or minority-owned businesses. And we've been growing our programming in Spanish, and we've also been serving more entrepreneurs who have previously been incarcerated. And so where we work, we started in 2008 in Denver, and we hosted our first programs at that time. And since then, we have grown to have programs in Aurora, programs that serve the entire Denver metro area in Spanish. And then the last couple of years, we have been expanding into our rural region. And so we have programs in Northeast Colorado, Southeast Colorado. We've done programming in the San Luis Valley and in Gunnison. And also new this year, we have entrepreneurs enrolled in our programs in Durango and in Garfield County on the Western Slope. And so what is our classroom and coaching that we offer? So what's unique about RMFI compared to other CDFIs is that for us, everything starts with our programs. And so we offer a really in-depth technical assistance journey. So a journey that starts from the seed of an idea, advances into launching that idea into a business that can generate revenue, and then seeing that business thrive into the future. So this is where everything begins with us, and then we integrate our lending into this pathway. So our these programs features learning that happens in the classroom and outside the classroom with mentors and other workshops and events that we have. So the idea phase of our program, sometimes this is, hey, I'm just interested in being a business owner. I don't quite have an idea yet, or I have a couple ideas that I'm thinking about. And so we have programming called our Business Idea Lab, as well as mentorship opportunities to help you test and develop that idea to see if it's something that's going to work for you. And then after that phase, we have our launch phase. And our core program here, which is the one that we've been doing since 2008, is our Business Launch Bootcamp. And so that's, let's take that idea, let's start generating revenue, let's plan, make a business plan and start operating it at the same time. And then we have our Thrive phase, which is a year after the launch phase. And that's a wide variety of support, other cohort programs and mentorship to help you navigate, the ups and downs and challenges and opportunities of running a business. And another feature is that in order to qualify for our programs, you'll need to be under our income limits, which is 80% of the area median income, and for your household size, and also have to operate within our allowable industries, which are very similar to what Megan and Alan and Marie have shared about the industries they can serve. And I keep going backwards instead of forwards. I don't know why that is. And so here's a picture from a recent graduation in the last couple of years. All of our boot camps end with a community celebration and graduation where entrepreneurs from our Business Idea Lab practice their elevator pitches, and the entrepreneurs that graduated from the most recent Business Launch Bootcamp get to share more about their business, sell their products, and connect with their mentors and other members of the community. And so what is the capital that we offer? So we offer capital integrated into this program journey. And so after different programs are completed, entrepreneurs are invited to apply for different microloans that we offer. Those loans all have low fixed rates and affordable terms, and none of them have a minimum credit score required. Because this journey, through the program is, it's a long one. We get to know each other really well. By the end of the program, we've really built a lot of trust, and so we don't have to have requirements that, like credit scores that might still be in the way. And so loans, some examples of loans that we offer, like our seed loan is up to $500. That's after that business idea lab. And so, hey, I've been testing this program, testing this idea, and I need a little bit of capital to pop up at my first farmer's market opportunity. Could be an example of what a seed loan could look like. And you can take that, test your business, and build credit along the way. Our launch loan, which is our most common loan, our most popular loan that we've been doing for the longest, is after boot camp, and that's up to $3,500. And then as you establish your business, you go into the Thrive phase, you've paid off smaller loans, you get the opportunity to apply for larger loans as your business becomes more established. So we have our Thrive loans, which is up to $7,000, and our growth loans, which is up to $75,000. We also have some limited grants that we've been able to provide in the last couple of years. So currently, everyone who graduates from the Business Launch Bootcamp is able to receive a $2,000 launch grant, which you can use whether or not you take out a loan. But if you take out a grant and a loan, combine some personal resources you might have, you have a good start to bootstrap your business idea. And those grants are available as long as we have available funding to make the grants. And so how can you get involved with us? If you're an entrepreneur and you're interested in starting the journey of entrepreneurship, maybe it's a brand new business, or you've been operating informally and you're wanting to get some more education, you can reach out to our outreach team by filling our dream survey on our website, which is just rmmfi.org. We have programming taking place throughout the year and applications accepted on a rolling basis, depending on programs that are full or not full, and which cohorts that we are recruiting for at different times. If you would like to volunteer, we have volunteer opportunities throughout our program. So if you're an established business owner and you're looking, you'd be interested in giving back to the community and helping someone else get started, we always have opportunities to volunteer and be a mentor in our program. And you can also find information about that on our website. And finally, you can subscribe to our newsletter on our website. You can also follow us on social media. And I didn't put my contact info here, but Sarah has it. Maybe she'll be able to send that out with the slides, and also happy to connect for questions later.
Thank you, Ryan. Yes, I can certainly include presenter information when we send the slides and the recording of this webinar out later this afternoon. So now that our presenters have given overviews of what they can offer for you as a small business, I'd invite you to either raise your virtual hand on Zoom and we can allow you to talk and ask a question, or you can enter it into the Q&A box. It looks like we do have a question from Juan, which is for Marie. He is wondering about the different types of B-side loans that you offer and if they are SBA loans or not.
Thanks for that question, Juan. Yes, we are an SBA lender. So just like CEF and DreamSpring, we have SBA Community Advantage for loans up to $350,000. I didn't cover it today, but we're also a certified development company. And so we, in partnership with banks, we help facilitate SBA 504 loans, which are for businesses that are ready to purchase commercial real estate, like Megan had mentioned, if you want to own where you operate. So we can facilitate loans up to $5 million under that program. And banks offer what's called SBA 7A, which is a guaranteed loan program, again, up to $5 million. And so we work with banks across the nation to be able to work on those loans as well.
Yes, Andre.
All right, if I may, I'm going to prime the pump a little bit. So as someone who's been in the business consulting arena for over 25 years in 3 different states, I've spoken with hundreds of entrepreneurs. And I know one of the things that we do, a failure point, is a lot of times we think too small. Right? We think about day-to-day operations, which we should, but we don't actually think about growth. So one of the speakers actually spoke about acquisitions, right? We're not talking about buying a multi-million-dollar conglomerate, but we may be speaking about buying another company that's in your line of business, where you can acquire that company. There's an element of payroll for you that would allow that to be able to cash flow the loan and some of those elements. So could the panel talk a little bit about if a company wanted to acquire another business or not? How much of that business would they have to acquire? Can they only buy 49%, or do they need to have 100%? Take that off. And yeah, if you can answer that for us, anyone.
Can jump in on that one. Thanks for the question, Andre. I think you could do it a number of different ways. Typically, when we're seeing business acquisitions, the new business owner, the buyer, is actually acquiring 100% of the other small business. And so it's a complete change of ownership. And I know we all talked a little bit about SBA loans. Previously, it had to be 100% ownership change. Now the SBA has some ways in which you can do a partial ownership change where maybe the existing owner is still operating and you're purchasing a portion of that, right? So now instead of one owner, there might be two owners into that business. So that's one way to do it. And then what Andre had shared is, okay, what if a business has 3 departments and they want to keep 2 and they want to sell off 1 department, which then you want to acquire that asset to be able to add to your own business. I think that's possible as well. And so I think it's just important to work with the seller, get a business valuation, which protects you as the buyer on what that purchase price is going to be. And then I do think it's important to have an attorney get involved with whatever that buy-sell agreement is. Sometimes when the seller is still in a similar industry, you don't want them necessarily being able to continue to operate, what they're selling to you. And so there's things called non-compete that you can ensure in those legal agreements. So you're not competing with the person you just purchased the business from. But SBA lending is a really great vehicle for that, because a lot of times when you're purchasing a business, you're purchasing what's intangible assets, which is also called goodwill, which maybe it's a book of clients, right? Or you're purchasing a brand name. So there's no hard asset like a piece of equipment there. And that's where sometimes it can be difficult for banks to finance if there's no collateral, or because it's intangible, that brand name or client list that you're going to purchase. So SBA is a great option for that. I don't know if anyone else had anything to add.
I think you answered it so well, Marie, that they don't need to.
Oh, actually, sorry. I was just going to make a quick comment. So sorry. That was a really good response, Marie. I think for folks that are looking into buying a business, I think if you can get at least 2 years of their tax returns, that's always really positive. The business valuation is key. A good example we just looked at a file where someone purchased a business for $500,000, but there was really no assets. The brand, to Marie's point, the goodwill is very challenging, and they were coming to us now for a working capital loan. The customer is obviously all in, but they didn't do a good job evaluating of that business, and so now they've got a large debt. The revenues aren't coming through, the income's not there, and they need more capital to stay afloat. So it's just a good example of, you really want to do a lot of due diligence on the front end. Make sure you know what you're buying, what that value is. A lot of lenders won't be able to fund that goodwill piece. So you want to understand, what are the true assets that you're buying? Like, what specifically are you getting? And I think we look at a lot of experience on a business acquisition. So if there's a way for you as a business owner to maybe work in the business, or have some language in your buy-sell agreement with the seller to show that what kind of training they'll be providing, those are key components of us trying to get comfortable with the deal as well.
I know that several of you mentioned your educational and consulting assistance programs. Does that include business valuation, or would you refer them to another organization for that?
We would refer them out. I mean, we can do a quick assumption, but it's not an assumption, but we wouldn't do anything formal. And so really, we're usually sending them to groups like the Small Business Development Center or SCORE to get something more refined. Ultimately, and that's really on the front end. But if we move into the underwriting, we would bring in a third party to actually do that valuation. The borrower, the applicant, would pay for that. as part of the application process. But on the front end, we're just screening it, making sure it makes sense, that valuation seems to make sense from a net income standpoint, from an asset standpoint, all that good stuff. But if it doesn't, that's where we'll send them to a small business development center or SCORE, groups like that, to help out.
Yeah, it's similar in our end as well. We can do a simple valuation. We have a template which we would base off of, again, those seller tax returns that are collected from the last couple years and the type of industry. However, for larger transactions and especially for SBA loans, depending on the loan amount, you would need that third party independent valuation just to make sure that there's no conflict of interest or anything like that. But also, it's just important for the buyer, right? It's protecting the buyer, right? Like Alan's example is they spent 500,000 on that business. Well, if it was they went through the valuation process or something like that, maybe that would have come in lower, right? And so it's just really important for the buyer to protect themselves, making sure that they're not paying too much based on their own assessment.
Sure. Thank you. Andrea is wondering if any of you, or I guess which of your organizations she should approach about a loan to a small limousine company. Anyone have experience with that specifically?
I think any of us would talk to her, probably.
Yeah.
We'd be happy to talk to her. Yeah.
I don't think she fell into the unallowable businesses. So Andrea, you will have their contact information after this, and it sounds like you can reach out to any and all of them to get that started. Okay, if we any last questions here from any of our participants, or any final thoughts from our lending panel? One more from Andre.
You're muted.
Absolutely. We're going to get our money's worth out of this money panel, right? So if everyone on the panel could actually share, because one of the fears about financing and money is, let's say you get denied, right? That hurts. We take it personal, right? Although it's just a business decision. Maybe some of you all can share reasons without getting specific on why loans are turned down, just in general. And then the individuals who are listening can go, oh, okay, we can fix that before we submit, right? If you all would like to take that question.
Yeah, I can get us started off. I think one of the biggest ones for us, and I probably is the case for everyone here on the panel, is as nonprofit lenders and CDFIs, it is really important to us to make sure we are not putting you into a situation where you cannot afford your monthly payment. So a lot of times when those denials come in, it's coming because there is a very large loan amount, but your monthly payment maybe is more than what you're bringing in a month. So having a really clear understanding of how much money and how much debt you're able to take on specifically, and I'm going to add to this as a business development component, what you're going to specifically use those funds are for your long-term sustainability of your business, is really, really important. That's probably the number one thing I see, is just too large of loan requests with not having enough cash flow to back it up. Because like we said, we do not want to put anyone into a situation where they're going to be in a cycle of debt. So I'll pause there and I'll pass off to one of my fellow panelists for any other insights y'all might have.
Come on, Ryan, we haven't heard from you. What you got?
Yeah. Yeah, so for us, it's not going to be, a specific metric like a credit score or something else like that. If you think about the end of our business launch boot camp, where we're offering the $3,500 loan, it's a small payment, it's a lower risk, but even, if your income's low, that can still be feel like a really large amount to you. And our pre-approval for that loan is based off of, did you complete the program? And did you pay your tuition and do what you needed to graduate? And then loan approval is that business ready to launch? So a reason why we might say, let's wait a little bit, you can take your loan within that first couple of weeks after boot camp. We might say, hey, let's wait a little bit because maybe you still need to register your business and get your bank account in line in order to legally receive a business loan and receive the funds. Maybe it's still need to test the concept a little bit more. So we look at, hey, have you you've completed the program, and have you also shown that that concept is, you know, viable? Like, will somebody pay you for your product or service? And so usually it's have you sold your product in the last month or two to someone other than your mom? Or do you have a really good pipeline, like, you know, like you've got a customer that's like, yeah, this person's ready and waiting for me, or I'm already signed up at this farmer's market for this summer, for example. And this is also where our grant program can come into play. And so you can receive that grant after the boot camp when we have the funds available, once you've graduated and once you've registered your business. And so if you're still needing to kind of test and verify whether for what we're suggesting or for your own confidence and saying, yes, I am ready to take on this responsibility, you can use that grant to kind of finish out your testing process and then come back, hey, first weekend at the farmer's market was successful. I think I'm ready for a grant to help me for the rest of the loan for the rest of the season. And those loans are available within, you know, the first year after graduating boot camp. But even if someone doesn't take a loan with us in that first year, they can access other lending opportunities in our Thrive phase.
That's great. I can jump in. So I agree with Megan as well. I think that one of the biggest reasons we might see declines is that cash flow piece, and not and maybe not asking for the right loan amount based on where the business phase is. I think just like the other lenders and like Alan shared, we can work off of projections, but understanding what those projections look like, right? So if you're at requesting 50,000 or 100,000, what impact, what are you going to be using it for that's going to increase those revenues? Is that going to change your expenses and your bottom line? We really want to dig into that and understand the whole story. But again, we want to have those calls up front with those business applicants so that we can say, yeah, based on what you're trying to do, like if you go with this program, here's what the monthly payment is. If you go with this one, here, you know, maybe the interest rate's a little bit lower, but it's a shorter term, so your monthly payment might be a bit higher. And so providing different loan programs and then allowing the applicant to say, okay, this one feels like the best fit for me, is how we want to approach that. I think if you are going to a bank or any other traditional lender and getting a decline, yes, it's definitely frustrating, but I think it's really important to ask for a reason why and that transparent, so you know what you need to work on or how you could potentially shift your ask, so that it would be easier for a lender to say yes or to reach those milestones that you need to. So really important to get that feedback so you can make changes.
My quick comment on all of this, I think for the audience, you can probably hear that all of us as lenders were very much cash flow focused, meaning we want to put our business owners in a position of success so that you can afford that loan comfortably and move forward. If we put you in that $100,000 loan, but the business can really only afford that $50,000 loan, we're not setting you up for success. So a lot of what we're looking at is really that cash flow, understanding the projections. If you're an existing business, then your existing financials will tell us what the company can absorb. But I would say all of us here are experienced lenders. And I think oftentimes a quick 15-minute conversation with any of us will tell us a lot, because the business is one side of it. But you as individuals, personally, your character, your experience, what you've done to get to this point to ask for the loan, that character piece is how we reference that, is a big part of the loan as well. And so on these smaller requests, I think all of us have a lot of flexibility on these smaller requests, whether it's program driven, whether it's just flexibility and standard underwriting criteria. But I think it's really worthwhile, I think, to have a quick conversation with one of us and kind of see, you know, what is the best offering that we can provide you. And I think, you know, Sal and Andre and Sarah, before we started this, we as lenders, we have goals, right? And it's our job to get this money out to the community. And so we are very intentional of attempting to find success with you guys as business owners. We want to give you this money. And so just keep that in mind, that we do want to deploy capital to you. If we can't do it today, how do we create that 60, 90-day plan so that you can come back and you are in a better position to qualify? So it is worth picking up the phone, talking through your scenario, and hopefully we can create a plan to get you that loan. If it's not today, hopefully in that next 90 days or so.
Ellen, let me continue on that comment about just picking up the phone and having that kind of quick call with each of you. One of our attendees has a consulting business. She is still kind of rebuilding it from COVID and hasn't been paying herself for several months, which has led to a lot of personal debt. What organization would be best for her to connect with for her particular situation?
I think if it's us, we're just gonna want to learn when maybe she was at the peak with her business pre-COVID, what did those numbers look like, right?
Mhm.
Who were those contracts with? And since COVID, what's changed? Why are those contracts not the same? Maybe those contracts are worth less these days. And what's it going to take to get back to that type of pipeline they had before? And so we're happy to speak to her. We're happy to speak to anyone and try to create that plan. But I think those are some of the questions that we're going to be asking to try to learn more about the request.
Sure. Goes back to what you said, to pick up the phone and have that 15-minute call.
Yeah, it's really,
yeah,
definitely.
Yeah. Hard to know without all those details. Marie?
Yeah, the only thing I'll add to that, because you mentioned the personal debt aspect of it, is like it's easier for lenders like us when the business debt is or the debt is showing that it's under the business. And so if things were like put on personal debt, that we'll have to ask questions about that as well, especially if it's going to be included as like a debt refinance as a business loan. And so having a little bit more backup documentation on that is going to be needed.
Sure. She's clarifying that she started after COVID, but the agencies that she worked with, which were nonprofits and government human services entities, had temporary COVID money. So I think it still stands. The person that's putting that question in there, just go ahead and contact each of these lenders. You'll have their information here shortly, and schedule that call, that kind of discovery call, to see how they can assist you.
Yeah, and I'll add that most people that go through our business launch boot camp are new business owners, but we do have people who are current business owners, a little bit more experienced, and are looking to kind of relaunch or reboot their business. And so if that is you and you're going into our program, some things that you could be focusing on is really be starting with that educational piece first, with the mentorship and the community support of, okay, what went well before, what's not working well now? Who is my target market, my 4%? Is it the same as it was in the past, or do I need to adjust my focus? And then once I've defined who those customers are, how am I going to reach them? How am I going to set up my operations cycle? What are my numbers going to be? What do I need to have in place? My capital needs to get started again. And so those are kind of what you'd be working on through that program. And then after the program, the access to the microloans and grants too, that could help with that piece.
Well, you four are a wealth of knowledge. Thank you so much. We've gotten a lot of comments just in the Q&A about how helpful this was. So the session has been recorded. I will send out a copy of the recording this afternoon, along with a copy of the PowerPoint presentations and their contact information. So please reach out to these organizations. Please reach out to these lenders. They are here to help you, and we are going to go ahead and close out there. Thank you so much for joining us, everyone.
Thank you.
Thank you all. Take care.
Thank you.
So much.
Bye.